Welcome, ladies and gentlemen, to the Zuri-Invest event. And we have here now First Mining Gold. And Dan Wilton is here, the CEO, to give us an update. Dan, good morning. How are you?
Good morning. I'm well. It's great to see you again in person. It's been so long.
Definitely. It's way too long. And we
Absolutely.
just recapped, I think it was like November 2019 in Munich.
Yeah.
When we saw us the last time and did an interview. Jesus Christ.
I think that's right.
Lot of some things happened in between.
No, a few things have happened in between, particularly at our projects we'll tell you about. No, it's gone really well. Yeah.
Yeah. So what is going on with the company? You have the major project, I think, is a Springpole project, right?
Yep.
And you have now already the PFS and working towards the feasibility, right?
Yes. So pre-feasibility study was done in February of 2021.
Mm-hmm.
So we're now most of the way through the feasibility study work, updated metallurgy, updated mine plan, process flow sheet, tailings design, and a few important changes I think that we made in scope as we've gone into the environmental assessment process as well. So that's all coming together. The other really important catalyst is we submitted our draft environmental assessment document about a year ago, May of last year. And so that's now in. It's been reviewed by all of the regulators. We've got comments back. We're responding to those comments and now starting to write up that final environmental assessment document, which we aim to submit next year, which should be about a 12-month process from there. So middle of 2025 is when we're targeting environmental assessment approval.
Okay, super. But environmental assessment approval is, I think, one of the most important permits, I would say.
For this project, for sure. For every project in Canada, for sure. No, it's a really big milestone.
So what can you do in between, in parallel?
So in between, in parallel, a couple of important things. Obviously, moving forward on the feasibility work, which I said we've largely done. Targeting potentially a pre-feasibility study update, really just to update the pre-feas in terms of the overall scope of the project, because quite a bit has changed since the PFS. And also moving toward really a full feasibility study late 2024, because you want to have something that's fresh in and around the time that you get your environmental assessment approvals. You need a fresh feasibility so you can start talking about financing alternatives for the project as well.
Okay, super. Yeah. So probably about the financing alternatives, we talk about maybe end of 2025 then.
Yeah, I think over the course of 2025, you start pulling those things together, and you start planning for those now because it takes a long time, and have a lot of those discussions that are ongoing. But the other things that we do in the interim, since we last spoke, First Mining's acquired another 5 million ounce plus gold project in Quebec, in the middle of the Abitibi, the Duparquet project that we bought last year. We had owned 10% of it, but we consolidated the balance of that project in September. So we now own 100% of this project, which is one of the largest undeveloped gold projects in Quebec, and located in an unbelievable jurisdiction. If you drive between Rouyn-Noranda and Timmins, so two major centers of the Abitibi Gold Belt, you drive literally over top of this deposit.
Wow.
So, yeah,
amazing.
Great location.
So great infrastructure, I suppose.
Infrastructure is amazing. So, and it's 3 past producing mines on the property. That you would then go in and look at sort of what they didn't mine in a fashion very similar to the way that Osisko ramped up Canadian Malartic. So, not to say it's necessarily going to become the exact same thing, but
it's a good sign.
It's when your starting point is 5+ million ounces, that's a pretty good starting point. Absolutely. So and we now have 2 projects of that size and scale inside First Mining.
Yeah, that would be just my question. Do you want, or do you intend to bring then 2 projects, let's say not at the same time, but one after the other into production, or do you say, because we were just talking about how, especially at the conference here, the Denver Gold Show is going on, how can the big boys grow?
Well, I think that's exactly the opportunity that you have in developers like First Mining Gold, in that development pipeline. A lot of the larger producers over the last 5 years haven't been developing their own mines. They've outsourced a lot of that development to companies like us who've moved them forward. And, we're doing the best we can. We've mobilized a lot of capital and built a great team that can advance these projects. So the question that we have, and I think we'll face this question in the future, are we going to build the mine, or are we going to find a partner for the mine, or ultimately is it something that makes sense for someone else? Our view is that question is best answered when you have the ability to really answer the question, which is after you have the environmental assessment approvals, you have a feasibility study, and all those things that we have the team and the capability to move the project forward to those points, to de-risk it so that our shareholders can benefit from whatever the highest value alternative is when you get to that point.
Absolutely. As you have already the PFS data, I'm just skating shortly back to Springpole. And you said the other project has also a 5 million plus ounce project. So about what capex we are roughly talking? I mean, just to give us an idea, it's a forward-looking statement for the regulators, I know, but to make sure, about what amounts we are talking, where do you see a possible AISC? I know it's too early to define that, but are we talking about, let's say, closer to $1,200? Are we talking below the $1,000? Because I think that makes it really interesting. And how many ounces do you think you can maybe produce annually?
Yeah, so we'll go back to the pre-feasibility study mine plan from 2021, which answers a lot of those questions. Now, there's been cost inflation since then. We're kind of going through an internal scoping right now to understand, with the scope changes we've made at the project, what do we think an updated capital and operating cost would be? And that's why I think we'd like to take that into an updated PFS. But for now, we'll just talk about the size and scope of the project, which is at Springpole, average annual production in the first 9 years of the mine life was 335,000 ounces a year.
Whoa, okay.
Like, this is a big mine.
That's a big one, yeah.
It's a big mine. And overall, life of mine average 287,000 ounces a year.
Still a lot.
All-in sustaining costs in the pre-feasibility study, net of silver credit, because there's quite an important silver byproduct. It's about 5% of revenue. Net of silver credit, all in sustaining costs, definitely lowest quartile. We're saying like less than $600 an ounce as it was scoped in 2021.
Well, I mean, so even if you would have
robust
inflation, we can say less 750 or something.
I think if we're pretty confident we can keep it under 1,000, and under 1,000 is going to put it in a really good light in the current market for sure. That's really entirely, you know, it's not a high grade deposit. It's about 1 gram gold and 5 grams silver, but those economics are driven by the deposit itself. It's a big homogeneous porphyry ore body that you can mine really efficiently. And, you know, the footprint of the project is quite small. So it means short hauls out of pits to plant and short hauls out of pits to waste dumps. So it's really, you know, I think the project, a lot of the reason that you can have such robust economics is actually around the deposit itself.
Okay, super. So what is cash situation with the company? Are you financed for this year?
Yeah, we're sitting today at about $13 million of cash and marketable securities of today about $14 million. We have a bunch of other cash and share payments coming due to us over the course of the next few years from all of the deals that we've done to bring partners into the other assets we had in the portfolio. And that's a big change from the last time we met in 2019. I mean, we've worked very hard on bringing partners into our portfolio assets at Pickle Crow, at Hope Brook. We're still the largest shareholder of Treasury Metals that has the Goliath Gold project that we combined our Goldlund project with. So all of those projects we have interests in, project interests in 2 cases and a big share position in another. And in a rising gold price environment where we hopefully are going to start seeing more attention paid to developers, and, you know, our partners are doing great work on exploration, growing resources, defining economics of some of these projects. We're starting to get to a point where I think there's great upside in those that today that basket of assets would be worth, you know, $50 or $60 million. And I think, you know, fast forward 6 to 12 months, we start getting some real traction on the developer space, and I think you could see those go much, much higher. So we're going to need to monetize some of the assets that we have to keep going. We're trying as hard as we can to avoid shareholder dilution, you know, but I think what we've got inside First Mining right now is a pretty unique package of assets and lots of exposure to gold that you can buy today at very, very attractive prices, like $6 an ounce in the ground.
Yeah, that's super. That's really perfect.
Lots of leverage.
Given the fact that everybody has a low share valuation these days, and it's unbelievable. Gold is to this morning 2014. I mean, everything should be much, much higher, but I think people do not believe still, but it is what it is. That's the market. what protects you from not be taken over too early? Because it sounds like a perfect match for a mid-size producer who wants to grow.
Yeah, listen, and I think that's something that historically we haven't really thought that much about, partly because, you know, companies really do need to understand the detail of what you're doing and really have to have been inside the tent, you know, signed a CA to be able to really understand the project and understand the current state of where you are in the permitting process and your relationships with indigenous communities. So that, you know, kind of information has always kind of been a barrier to what I would say a hostile deal might be. You know, I think we're at a point right now where it's so cheap that it's one of those things that's kind of starting to keep me up a little bit more at night. You know, there's something really opportunistic could come. And again, because it got two of what are soon going to be two of the 10 largest gold development assets in Canada, both of which have district scale exploration potential beside them. And established resources and well advanced in a feasibility and a permitting process with one of them. It's a really attractive, as you say, really attractive growth profile for a mid-tier developer who wants to build out Canadian asset base. So you know, I think there's a few other things. We've got a great group of shareholders who obviously, many of whom have come in because of Keith Neumeyer, our founder and our board chair. And, you know, Keith himself owns a big share position. First Majestic still owns a big share position. So, you know, I think that could
protect you a bit.
Protect us a little bit, but no, it's starting to keep me up a little bit more at night these days for sure.
I can really imagine. Yeah, because you could say, okay, with Springpole, I do that. And then with the Springpole production, I finance the other project.
Yeah. And I think that's exactly it. But again, I think we get to the point. The initial capital in our pre-feasibility study was $718 million US. That will be higher now, where there's been inflation. We all know that. But I think, you know, that gets matched against the leverage that the project has to the gold price. So at $1,600, it was $1 billion US NPV. And every $100 increase on the gold price was $150 million of after-tax NPV.
So you're already at 1.6.
So you're already at 1.6.
Wow, not bad.
You know?
Super.
So you'll trade off a little bit of that on capital dollars, and I think we still would end up looking better using a bit of a higher gold price. I think we have an ability to kind of match those off. But, you know, we'll wait till we get the economic studies updated and actually see where we go.
Perfect. Dan, thank you very much for the update and keep fingers crossed and all the best for you. Make it happen.
We'll keep trying. Needs
your gold.
We'll keep trying. We'll keep trying. Great to see you again.
Super. Great to see you. Thank you. Yeah, ladies and gentlemen, that was Dan Wilton, the CEO of First Mining Gold. And you heard it. Two fantastic projects. One of them, Springpole, is really well advanced. Pre-feasibility is done already. They want to update that and also move them to the feasibility study. I think that's a really right way. And you heard it. That's a real project. We talk about around 300,000 ounces plus production per annum. And as he said, for the life of mine, probably 287,000 ounces, if I'm correct. And that's exactly what we want to see. But what I even like more with it is the low AISC. Even if I calculate much more inflation inside, we are still below probably the $900 level. And that is exactly what the mid-size, but also the big-size producers love to have, because growth is not there. They have not explored and they are searching for projects. So check out the company. It is way too cheap to stock. I think it's a great buying opportunity. Thanks for watching us, and bye-bye from Zurich.